yesterday's high right here at the 88, but obviously carves right into it. I mean, it's probably coming right back. So we got a 36 ATR, which is that's a pretty tough trading environment for us on the NQ. We may have to trade some ES, you guys, because the dome on the NQ it's just wild. It's very, very fast. And it may bite us. And when you're on the right side of these trades, they're fantastic because they just run. But I think in terms of being able to kind of see how trades are placed, etc., let's move over to the ES for the time being, and I'll be able to show you guys some ES trades. And the ES dome is a lot more copacetic here. So, all right, let's take a look at where we're at. We're coming back into the weekly open. Okay, now the bulls came out of the gate pretty strong, and they went over the overnight high and then quickly got liquidated back underneath the 6,500. So we're looking at this right now. We have volume weighted average price sitting at 94, and we have the bottom of the opening range at 96. So I'm going to try a short here inside of the lower end of this opening range. Okay, so I'm going to short. Well, we'll short the 96. Okay, so I'm going to short 96 here. And we'll see. Let me see. Hang on. I got the wrong bracket on. Put the ES bracket here. So we're going to short 96 here. Okay. And we've got a pretty decent ATR here. So if we're right, if we can get this done, we have potential target of the lower part of this initial balance here. Let's watch this because we might not get a 96. We might have to short 93. Because that is the weekly open here. All right, so let's short 93. Let's see if they can actually push back on this thing a little bit here. We missed it. This is where I would be taking profit, so we missed it. This might be tricky right here, folks. This might be tricky. Because you can kind of see them trying to push this back up. We'll stick to our original plan. Let's see if it can actually reach up to the 96 here. We have all these, so all this this price action underneath the 88 lends itself to a test of the 77. This is the daily pivot holding so far. It is a bear flag. This is where the bears really need to kind of step up and hold it if it can get there. Okay, so looking at this, we have our opening range. We have a break below the opening range, and now we have our lower low and a retest of the bottom of it. We have a target down below of more than 10 handles, so it's worth a try. Does that make sense to you guys? You guys understand that? I haven't looked at those. I don't know that we're going to trend today. We're back inside the opening range on the Qs anyway. If we were going to try, if the SPY is really going to get ugly today, that's a 646 put. It is below yesterday's close right now. but it's early. This is where it needs to happen. Let's go take a look at what that looks like. That's pretty cheap. That doesn't seem like it's going to work. We'll watch it. I'm going to watch it over here. Price 647 is better. All right, let's see. Here's our chance. Let's see if they can push back on this thing. Now, what this does set up is back above this 93, they can grind this thing back up to the roundy. But we're just heading into this, all of this kind of potential resistance here. And now it's gotten super slow. Come on, man. All right. I don't really want to chase it down. We're in between so this moving average right here is the 60-minute, 20-day simple moving average, the hourly midline. So this is plotting from a Bollinger Band on an hourly chart. When we're in between these two, there's nothing really to do. Maybe the NQ is calming down enough for us to trade that if this thing's going to sit here like this. Let's take a look. NQ will at least move. Yeah, let's move over here. Let's move over to the NQ, you guys. Is that all right with you guys? Mhm. Still pretty frothy ATR here. All right. So what we have setting up is a short 77 or a short 88. Now, because the ATR is big, we have potential long also. Feels like they might try to move this back up. All right, so I tell you what, you guys, this is what we're going to do. We're going to let it come back down here to cash. Okay. Well, at least the 50. And if cash holds, we're going to buy it. We're going to buy the 46. Okay, so let me turn this on right here. So if this comes down here to this level and it holds, we're going to buy the 46 on a reversal. I'll show you what that is. That's a back through trade. This is the overnight high right here. So it can kind of flip to the bull side if we can sustain trade above this. We're above cash, so the longs are supported by that. But we're 20 points away from it, give or take. So I don't want to chase it. Okay, so we'll go ahead and we'll stick to our plan, and we'll go ahead and try a short up here. We want to let it push to 82. We're not going to just sell 77. We're going to let it actually push up to 82. So we got two options here. We've got a long down here that we'll try, or we're going to short this up here. The AD, the advanced decline, is not horrible. So I don't know that the bears really have much here. I don't know if that was just a liquidation that is getting snapped up here. But look at the dome. You see how kind of slippery it is? You know, it's just kind of, there's no real traction to it. Okay. Let it come down here. All right. So there it is. We're going to put an order in. And if it just keeps going, we'll cancel the order. But if this level holds, we're going to get long 46 here. It's trying to hold cash. It's trying. All right, we're long 46. We want to see if we can get, okay, we got a +5. And we want to see if we can reach up, back up to this volume weighted average price right here. Okay, so that's what's called a back through trade. Let me get rid of some levels here so we can see it a little easier. You see how price reversed off of this right here? So the reversal off of that, we bought 46 and we got paid on that. Can it continue? I don't know. I think if they let us keep it, actually, I think we can get a bigger move off of this. I think we can get all the way up here to 76. All right, we're out. So all that did is gave us risk out of the trade. I'm going to go one more time if they hold this cash line. Okay, I'm going to go one more time here. I'm long 46 one more time. Now this could stop me out too, just as easy. I want the bars to close above this cash line right here. And with the ATR, I mean, I'm definitely, have potential to get stopped out here. And it looks like I might. So now I need out. So I'm going to try to get out here at 42. Now I'm out for a -4. Okay. So what just happened there? Let's talk about it. And that is the Sierra Dome doing the escape hatch. So essentially what just happened here was I was long. Okay. And I know this might be a little confusing to non-futures traders. Yeah, this is just a function of the ATR. It's just really kind of whipping around. I was long 46, right? I'm using 42 as my risk. Okay, I did not have a hard stop at 42, meaning I didn't have a stop loss sitting there. When price went down to 36, that's down 10 points. That activates what's called an escape hatch. I know it sounds funky, but an escape hatch on my order entry, my bracket, it modifies my bracket. So it takes all of the areas where I was going to take profit, it pulls them all down to offload the trade for a -4. And it does it automatically. So that's something that Ned programmed for us, and it's really cool. Now it's going to go without us. But the bottom line is they're holding this level. That's a little more bullish than bearish. So now they're going to force us to chase it a little bit. So I'm going to buy the 56 if I can. So I'm going to buy 10 points higher than I was just trying to buy here at 56. And this is the NQ, you guys. It can get kind of thrashy a little bit here. All right, we're long 56 now. Okay, let's see if they can continue to head back up to this the high of this bar up here. All right, we got risk out of the trade. So we just got paid. We're looking for a move right up here. We got long 54.5. That's how fast this thing's moving. Excuse me. So we just took a -4 on our first trade, and that's a total of 8. Actually, no, we got a +5 on the first trade. And then we just got another +5. So we're down 2 points right now. We want to try to see if this thing can finish the job up here. It's trying. It's trying. No, we're out. Just whippy. Whippy, whippy, whippy. I'm going to go again one more time here. Long 56 if this holds right here. If it goes down to 46, I'm going to cancel the trade. All right, we're long again, 56. Ooh. Feels like it wants higher. We're above cash. And we're above an inflection point. Oh boy. We might have another, yeah, we have another stop here. This one might not let us out. Yeah, so I got stopped out on that trade. Oh boy. All right. We got to wait now. See, this is the problem, you guys, with this ATR. Might have to stop trading the NQ because it came right back to our entry, right? It comes right down to stop us out, and then it comes right back to our entry. And that is, it's a little demoralizing, honestly, to see that. But we'll wait a second now. VWAP, volume weighted average price, is resistance at the moment. It's just really choppy here. It's making a decision here. We're either going to test the blue line right here, or we're going back through this stuff up here. Yeah, it's just really choppy, you guys. Very, very choppy around this inflection point. So, excuse me, one second. Sorry about that. Still hacking. All right. So let's just sit tight because we're going to resolve out of this. And if we resolve down, it might continue lower. We do have a long 26 that is setting up. That's just a probability play. That's our golden setup. So if it comes from this 50 right here down to the 26, we're going to buy it. If it gets there. It's just a very normal kind of a setup for us. It is a high ATR setup. So we want it to kind of get there in this candle. We want this candle to push all the way down here. They keep holding cash here, you guys. They keep holding cash. But we're going to stay out of the traffic here. Okay, I'm going to put the order in. All right. Now, resting orders in a high ATR can get run over real easy. So it is very important that it makes its way down here in a single bar. I don't want it taking like more than one bar to get there. So we want it coming down here. We're going to buy it if it gets there right here. See if they let us in. All right, long 26. This should retest 33. Okay, we got 33, so we got a +7. Now we want to see if it can reach back up towards the 50. We're in what's called a golden setup right now, where all this is, I'm going to explain it to you guys. 48.5 is what will give us what we need. We're going to talk about it in 2 seconds here. This is a very high probability trade. I know it seems bearish and it seems very counter trend, but this is our 26. A lot of traders here at TheoTRADE are traders of the 26. Hopefully you guys are in this. You got stopped out. How did you guys get stopped out and I didn't? I got it. So we got the full 31 points off of that trade. Nice. Nice, you guys. Well, some of you guys got in, some of you guys got stopped out at auto break even. I'm not sure how though. But let's talk about it. This is a golden setup. The way that this trade frames out, it's a probability trade. So I want to kind of like take a few minutes to explain this to everybody. Okay, so, and this is going to require me to do something here. So give me 1 second. I'm going to hide this. I'm going to hide this. I'm going to hide a lot of stuff real quick so we have just really clear price here. Now it is setting up again, but I think this next one for you guys that are experienced with this, you need to try it on a back through. Be careful buying this again the way we just did. Okay. So the 50, the in this case, the 23,650 is a, here, we'll do it again. But we want it to come down here actually. Before we put the order in. So let it come down here to 22s. Because it might just keep going. Well, looks like that one would have worked too. Good, good, you guys, good. All right, so it looks like it's going to chop here. Yeah, so we missed that one. That one would have also paid us to the 33. So there's a couple characteristics here that I definitely want to spend some time with you guys on. Okay. All right, so a couple things real quick. On the Nasdaq, so on the NQ, I have 2 inflection points, 2 levels that I consider big levels, big inflection points. That is the 50. So in this case, the 650, and then that is the 600 down here. Okay. Those are big inflection points. This is 50 points of price, right? From the 600 to the 650. Everybody follow that so far? This is the middle of it right here. So the 26 is the middle of the 50 points of price, right? Very simple, right? 600 to 650 divided by 2. It's literally 25, but I use a 26 because that's what the NQ told me to use. Okay? Everybody got that so far? Stoked. Most of you guys caught that trade. That is awesome. A lot of golden setup winners in the chat. Sweet. I'm assuming that everybody has that. Don't all rush to answer at the same time. Right? So all this is a middle. So my entire strategy for the Nasdaq as a whole is a retracement strategy. Okay? So you guys know what retracements are. Fibonacci retracements. So if I were to put, if this was just a Fibonacci retracement, this is the 50% line. What do we do when price comes from above to a 50% line? It is a long setup. We buy it. That's all this is, you guys. When price comes from the inflection point to the midpoint, which is our 26, we buy it for a return back to the inflection point. That is the golden setup. The other key level in the 26, in this whole price action, this price schematic, the very high probability trade, part of this trade is that the 26 is going to go to 33. There's a 90% probability that that is going to take place, especially on the first test. Okay. So when we buy two contracts here, we take one off for a +7, and then we take the other one off up here for a +24. And that's where you're seeing in the chat right now, people are saying they got 31 points. On the Nasdaq, that equals $620. As you can see right now, the 26 is now the low. It's now gone up another 40 points here. Right? So that's all it is. Take the emotions out of it, take the everything out of it, focus on the probabilities that you can at least get the first part of the trade done, and then just let it work from there. And that's all we did, you guys. That's all we did. And it ends up on the second test here, it ends up being super bullish. And it's now looking like it's going all the way here. So 77 is another key level in this. We're not going to do anything because as I look left here, there's too many wicks right here. So we're going to sit tight. And give me 1 second. I got to turn my stuff back on here. So any questions on that, you guys? I mean, it's pretty cut and dry, right? It's pretty self-explanatory. So 77 actually did just push back. So that's good. It looks like it's going to pay you. Looks like it's going to pay you. Pro mod, I took profit at 48.5 because of where I got filled. I got filled on my second contract at 24.5. So if you saw on my dome, it said my plus 24 was at 48.5. That's just where it was. So it was just getting the 24. Now we're back above cash here. So you guys that shorted 77, you just got 31 off of that as well. I'm trying not to video game this thing. Look at these bars. We still have a very big ATR here. This is still bullish above cash. They're not able to break down under the OR here, so I may try another long. A long 46, that is, if we can test cash and it holds. Awesome, Walter. That's fantastic. 1 year in, Walter, and you got a profitable business. That's awesome. That's fantastic, man. So again, we're using this green line as kind of a bullish line. If they can hold that, we're going to get long again at 46. The fact that it rejected so easily, though, means the bulls are really struggling here. Let price come down here. Come on, man. So even though we took a stop loss on one of these trades, we're still on the positive side of this session with just a handful of trades. All right. So they're trying to hold this inflection point. If they do, we're heading back here. I'm going to buy the 56 if this holds. So I'm long 56 here. I got a really bad fill right there though. So I want to see the 50 continue to hold. If it does, we should head back up towards this level down up here. But the 50 has to hold here. Oh boy. So now my auto escape hatch engaged again. And I'm out for a small loss. So that's the auto escape hatch engaging again. It went down too much against me. That thing is worth its weight in gold, Ned. Excellent job on that, programming that. They're holding the 50. I'm going to go one more time here. This is just, it's slippery. So I'm going to buy 56 one more time, and let's see if they can push up back to the 77 here. Okay. Sometimes it takes more than one entry. This is the chop zone right here for sure. All right, this one should go. All right, we got a +5. Let's see if it can reach back up to the high of this candle up here. And so it's not so much a program of the dome, Meta and others. This is a modification of the bracket. So it modifies the bracket automatically. P. Boyle, I do not buy the cash level because it is not one of my levels. I'm just simply what I would call leaning against it. I'm just leaning against the level, meaning if it holds, I get long the level that I trade. So I only trade these gold levels on my chart. So it just needs to reach one more little reach here, and we'll get a +20 on this. And we got a +20, right? Booyah. So we took a long here at 56 based on holding the 50, looking for a retracement back up to this level, and we got it. Now it kept going, but we chose the 76 as an exit because it was 20 points, right? So a little bit of a bumpy ride this morning, but we got a golden setup in, and we just showed you a long above the cash level and above this inflection point. Okay. So far, so good, right? Ned, I don't know if he's in here at all. Ned, are you in here? This is the NQ. This thing moves. People are asking you questions about TradeOvate. If you can, if that is a possibility on TradeOvate, the auto escape hatch. So still big, long tails off of these inflection points. So we really haven't gone anywhere. Honestly, this all this is yesterday's high of the day so far. Yesterday's high of the day. Okay, so look at the difference between all these tests of this level. See how this was resistance, right? This was proving to be resistance, and then it just hops over this and produces a higher high. But what is interesting here is the fact that they put a candle, this body of this candle has closed above this level. We should retest this level right here. And again, I'm not trying to like video game this and be in every single move for you guys. I'm not trying to impress anybody. All we're doing is taking setups. Now it looks like it's going to test the next inflection point. So what this has done is this has gone from one inflection point, the 50 here, and it's reaching for the next one right here. So that's 50 points of price, right? And so what we've done here today is we've gone from the 600 right here to the 700. And look at all of the price action in between off of our key levels. We achieved this actually by the 26. Go figure. Kaltors, this is Iron Beam. So Iron Beam platform is not really programmable at all. If you're talking about just the platform itself, you can't do much with that. You can't even draw lines on those charts. So this is Sierra chart, and this is attached to Iron Beam. But if you're talking about just the actual Iron Beam platform, very limited capabilities on that thing, unfortunately. So supposedly they are redoing it. I don't know the features that are going to be on there when they redo it. So we're back above yesterday's high on the daily chart. We're back above yesterday's high now. So all of that bearish action, all that crap right here is getting completely retraced. Let's go look at the hourly chart here. Same thing on the ES, by the way. Any questions on what we've done so far, you guys? This is the first hourly bar. Where did this open? It's opened at 633. It closed at 609. So, I mean, that is technically a red close on the first hourly bar. That usually means a high probability that the market closes red, but it ain't going to do that with these kind of bars on the other side of it. So this what lined up with our 26, by the way. This is the bottom of the opening range and the bottom of the initial balance. Actually, sorry, it's not the bottom of the initial. This is the bottom of the opening range. All we are is back inside the opening range. So we could go just kind of chop around here. I don't know that, and this thing's probably going to start to get quiet now. But we'll give it a go. We'll try to find one more trade here. This is bullish, however. This is above yesterday's high. I mean, I can show you in terms of number of tests. The reason that it's important is because the first test has the highest probability for my setups. And so this is technically the second test right here, because price came from 38 down to 26. So that came down 12 points. So that's one test right there. This is the second test, and this lined up with our golden setup. So still a high probability. This was actually the third test. So what constitutes a test from above or below is when price comes from at least 10 points from above or below. Okay. And so you could see this came from 36 down to 26. That's 10 points. You see that? P Boyle, do you see that? Let me know if you see that. Now, what would restart the test count is when price, and these bars are really big, okay? These bars are big, is when price goes through like this, when price goes through the level and then to the next level on the chart. I do trade it if it's 10 points. Absolutely. If you are trading, so look, I have the golden setup strategy is based on a very strict criteria that price must come from the inflection point, if that's what you're referring to. You're not trading it on 10-point retracement. You're trading it as long as it comes from the inflection point, but you have to be cognizant of how many times your level has been tested, even from 10 points. Does that make sense? If the ATR is 20, you're not going to be trading it from 10-point pullbacks or 10-point bounces, because each of these bars is 20 points wide. So you're better to let it bounce 20 if you're looking to short it. You're better to let it pull back 20 if you're looking to buy it. That's what this is right here, by the way. Right? So this is a 77 that retraced all the way back to 46. I was just being the ball here with the inflection point of the 50 holding. What led me to the conclusion of being a bull there was that we were above the cash level. So the market opened right here. Below this level is bearish. Above it is bullish. And if you're thinking to yourself, yeah, but Tony, you bought this, so you're below cash, and why are you buying this? It's a probability play. That's all it is. It's not a short. You're not shorting this. Please don't do that. Don't ever do that. Don't short it from above like that, right? And so I didn't mind buying it higher up here as long as price could do some constructive price action above the cash level, right? And so MT just said, I got smoked on shorting this. And so if MT were to look left, could have avoided this trade by looking left, because you've got a test here. You've got all these wicks right here. That, to me, these wicks, I even passed on this trade right here, because these wicks indicate pressure. That indicates that at some point we are going to break through this level, right? But MT, did you short this one? And if not, why? If you're willing to short the 77, this would have been the one to short, obviously, right? So it's very important that you look left on this stuff to see how many times this has worked. If price keeps coming into a level from above or below, it's going to break. Like this, for instance. Look left. You got a really solid test of the 06 here. Now it's broken. You follow me? You got the one before. Okay. So now you can see, I'm glad you're on your simulator. Now you can see how you kind of need to pay attention to that stuff. It will run you over. So now let's look at this. We're going to turn this on. This is going to be, we're going to buy the 96 right here. This is going to be the first test of the 96. Look left. This is the first test. It should pay us at least risk out of the trade. So I'm long 96. Let's see if it can pay us. It's the first test, so it has a high probability of at least testing the red line right here. We got paid, right? We got paid on the trade. Now we're in a trade that's working. And we want to see if it can reach up here to finish the job. Okay, so that's a first test from above. Do you see how that works? Sorry about that. No, no. You're already in a trade that works. If it takes you out even, I mean, you're not going to go again. You can try to test that stuff in your trading if you want, but I don't trade it that way. If it goes up, like right now, we're in a trade that's working. If it comes back, I don't want it. So I'm going to get stopped out. You're asking me the same thing. So if this comes back to 96, would I buy it again? No, I would not. I'd buy 88, but I wouldn't buy 96. Right? Why is this a first test? Why do you guys think this is a first test of the 96 from above? Because when I look left, guess what? I can't look through this. This is a wall right here. So anything that happened over here doesn't matter. None of that matters. This is a first test of the 96, and it paid us. It did what it was supposed to do. Does that make sense? There's no reason to look beyond this green bar right here. It's like you're bumping your head into a wall. We just got a plus 20. So we just got a plus 20. We're out of the trade. Another 25 points in the NQ here. So far, we've got 3 of those. We've got 75 points. We had a couple risk out, stop outs. So we have about 90 points minus the 30 points on the stop loss. So we're well over our 50 points for the day that we look to try to attain on any given day. And we have not, by the way, we have not really over traded here. We've only taken a few trades, right? We could have truly video gamed this thing and took all of these different trades, but we're just sitting and waiting for our opportunity. Does that make sense? So, Doc, what makes it a wall? The visual of it makes it a wall. Price transcends all of these levels here. I mean, it just the visual of it. Does that not look like a wall? Why would any of this price action matter based on this right here? Same thing here. Like if you're going to look at a level here, you can't look beyond this. It's just, it's literally looks like a wall. I mean, I don't know how else to say it. You see what I mean? Nice, Joe. Excellent. Estevez, I teach these other levels in my mastermind as well as in the futures room. All right, so look, we're gonna be done with this for now for this session, but the Professor Bierman is up next. Professor Bierman is up next, and his session with you guys is financial radioactivity, the value of asset utilization metrics. So Professor Bierman will be coming in just a minute here to take over. I hope this has been helpful, you guys. I know that some of the things that I talk about, I kind of need like a decoder ring for some of this, but I'm really, really trying to be extremely clear with 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 our intentions, why we're buying the levels, what we're looking at. As I leave you, the one main thing that I want to tell you is that all moves in the NQ happen from those inflection points that I just talked to you about. The round level, the big round level, which my term for that is called a roundy. So the 700, the 600, the 500. The second inflection point is the 50. The 550, the 650, the 750, the 850, etc. So all moves happen from these levels. We have entry levels around those levels, i.e. the 96, right? So we bought the 96 and they basically converted, if you will, the round level to go up, and they're reaching up towards the 33 now. Okay. Typically, golden setups are in the first 3 hours, first 2 to 3 hours of the day, but they can happen at any time of the day. The first 30 minutes is the highest volatility. And so you probably want to try to stay out of the market in the first 30 minutes as a new NQ trader. All right. All right. So Professor Bierman is in the house. I'm going to stop recording now. And then I'll